Hey guys, how's it going? Hope everyone's having a good day. So I just thought I'd come on here and talk about hedging. Okay, we hear a lot about hedging. I think I've mentioned it a couple of times, but I've not really went into it. Okay, essentially you're just hedging to mitigate your risk. Okay, that's essentially what you're doing. So let's say you've got a short running, you're looking to buy to mitigate the risk. Okay, and vice versa. Okay, now I'm not gonna we're not going to play ping pong just yet. Okay, I'm just going to talk about the basics. Okay, I'm going to use the 4 hour as my higher time frame, and we're going to play that continuation. Okay, it's not going to be a long video. It's going to be a quick video, straight to the point, very basic. Okay, but this basic information, it will, if you use it properly, it can transform your trading. Okay, so let's just say, let's just focus on this bit of price action here. Okay, so at this point, we have taken out some sort of liquidity and we have broken structure. Okay, just before I go on, by the way, I just want to say I'm not going to be focusing too much on entries and not focusing too much on the higher time frame point of interest and why I chose what I chose, etc. Okay, just want to keep it purely based on hedging. Okay, so we took out liquidity, we've then broken structure. Now let's just say, for argument's sake, we are in a sell position from here. It stops above the previous candle high. Okay, so we're in this sell. Cool. Well done to anyone that got into that sell. Right. So forget SMC, forget everything, complicated. Just basic trading. Okay. When price gives us an impulse, we can anticipate a retracement. Okay. Now this retracement can be to the extreme, it can be to some sort of a point of interest in here, whatever it may be. Okay. Well, we can anticipate retracement. Okay. To then get the continuation from the higher time frame point of view. Okay, so all you're doing, right, is, let's say you're in a short from here. Okay, so you're in the short. Now at this point, you know that we need to get a retracement, right? And we've marked out our higher time frame levels. It could be this or this. So we know we're anticipating price to come back into these zones. We don't know which zone it's going to get to, okay? But if we get good lower time frame confirmation, then we can simply buy into these sell zones. When price gets to here, what do? We wait for confirmation again, and we simply sell off. And this is it. This is as complicated as you need to make it. Okay, so this is basically what we're going to do today, right? So let's just say, okay, added confluence, right? Added confluence. We are coming into a 4 hour demand zone, point of interest, whatever you want to call it. Okay, cool. So the 4 hours bearish. Okay, we are looking for price to come into this extreme here, or potentially this zone in here. Okay, cool. So we know price should come to at least here or here. That's what we expect, and that's what we're anticipating. So what we're trying to do is get into some sort of a buy from here to get into this zone or this zone to then continue the selling momentum. Okay, that's what we expect, and that's it. Okay, that's as hard as we're going to make this, right? And that's as hard as it is, to be honest. Okay, so let's just jump down to the 5 minutes. Okay, let me just do that. Okay, cool. Let's just play price, see what we get. Okay, so straight away I can see a potential. Where's my arrow? Okay, potential SMS. BMS, which then led on to a major BMS also. Okay, so at this point we have our entry marked out right here. Okay, let's just get a long position in, something like that. We're targeting our higher time frame points of interest. Now let's target the extreme. Okay, so 25%, right? Let's just play price. So we tagged in. We tagged in perfectly with that wick, right? Let's just play price. Okay, I think I'm gonna go up to the 30-minute, otherwise we'll be here forever. Just playing price out. Now look, once we broke this structure as well, okay, if price does come back and retrace into, some of these levels here, if we get this retracement, then definitely look to buy again into those sell zones, into those high time frame sell zones. Okay, do we get that? We don't. Okay, now at this point you need to be careful, okay, because what has price done? Price has come into one of our reversal zones. Reversal meaning a 4-hour continuation, a 30-minute reversal. Okay, so understand that from a 4-hour standpoint, we're in the first one, we're in the first zone. Okay, this is the extreme. Okay, we could just continue selling from here, or price could go up. Okay, now in this occasion, what's happened here is the 30-minute, okay, has flipped bearish. Okay, meaning we have broken structure. Okay, we've broken structure there. Okay, so these are signs telling us, you know what, we could potentially reverse from here. Okay, now at this point, we need to identify, okay, where could price come back into? Come back into here, which is the extreme. Why can you do that? Well, one reason is the imbalance that's left here. Okay, that's one of the reasons. So guys, just talking about imbalance, I have done a video on imbalance, the basics of imbalance, which I will, add to the end of this video basically. Also, just wanted to say thank you so much for all the support. It's not been that long since I started this channel, and the level of support I'm getting, honestly, I appreciate it. If you guys do like the videos, the content that I'm creating, please do give it a like and a share. And if you've not already done so, please do subscribe to this channel. Okay, so enough of the market and stuff. Back to what actually matters. Okay, so we've identified, our extreme, and one of the reasons why price could come back into it is due to the imbalance here. Okay, now for me, the next zone would be this. Okay, now if I just play price, okay, we can see a clear intention for price to turn bearish. Okay, now I did say we're not going to play ping pong just yet. However, I think this is a good example. Okay, so we've now reacted from a supply zone. Sorry, 30-minute demand zone. Okay, now the bigger picture, however, is we have reacted from a 4-hour point of interest, okay, whereby price could now continue to the downside from, okay, and the 30-minute has flipped bearish, okay, showing intention for lower prices. So we could have short position from here. Like I said, I'm not going to talk much about entries. You don't need to take trades like this. You can wait for confirmation or whatever, or a short position from the extreme. Okay, so these are two positions that you could potentially have. So using the same methodology that we just used, okay, going from the 4-hour to the 5-minute, why don't we do the same thing going from the 30-minute to the 1-minute? Because we know price could come into this region or this region before then going off, potentially. Okay, so why can't we look to buy into these zones? Now, when you're doing this, right, make sure you're targeting these zones, and don't be going and targeting, the 4-hour highs here. Okay, why? Because price is telling us otherwise. Because price has reacted from a 4-hour point of interest. The 30-minute has flipped bearish, showing good intention for price to turn bearish from that zone. Okay, so make sure you keep your targets realistic. Okay, make sure it's realistic. Okay, so jump down to the 1-minute, see what we got. We've not really got anything yet. Let's see if we get anything. Okay, so we have SMS, PMS, major bins. Okay, with an entry right here. Okay, so we have our entry placed at a 2.3 pip, just 2.3 pip stop. Now we're targeting. Let's just target here. Okay, 14.5%. So we tagged in. We're in profit, and we get taken out. Fine, no problem. We ran around 8%. Okay, I don't think anyone's going to be complaining. Running about 8.5%. Okay, that's fine, no problem. So these does happen. I just wanted to show this just to show that just because you have a target in mind, it doesn't mean price is going to get there. Okay, so make sure your targets are realistic. It's logical. It makes sense. Okay, so now we just wait. See, okay, so price is now tagged into our first position here, playing around, and we melt. Okay, so we don't get tagged into the extreme, we get tagged into this zone here. Okay, so let's just take this back. This grossed at about 17.7%. Now this position here, I'm not gonna even talk about it. We had a position in here which we look to hedge these sales, which grossed about I think I said like 8.2, 8.5%. Okay, and then we've got this position that's running at the moment. Just delete this. So this position running, I'll just stop at the pullback, okay? It should have grossed about 17%. Okay, 17, 18%, whatever. Okay, doesn't matter. That's not the point. The point is we identified an impulse. Okay. We then identified, you know what? After an impulse comes a correction. So then we got into this buy position. Okay. We then identified price coming into our higher time frame sell zones. Okay, we then identified the 30-minute flip, and our 30-minute zones. Okay, we had a zone here as well. Okay, we identified that. We looked to buy into the 30-minute sell zones. Okay, it stopped us out a bit prematurely. Then we carried on with the higher time frame buys and sold off from that 30-minute zone. Okay, so this is essentially what you're trying to do. Okay, you're trying to minimize your risk by buying into your sell zones, selling into your buy zones. Now, whether these are high probability, whether you fancy doing this, you need to back test it, live test it, actually trade on it to understand how your emotions are taking these trades. But essentially, this is what you're trying to do. Okay. So guys, that's it for me today. I hope this video helped clear out any little questions you had about hedging. If you've got any further questions, honestly, just give me a shout and I will get back to you. Hope everyone has a good weekend, and I will see you all next week.